Okay, so this video is requested. Um, I will try to make this video somewhat similar to Ali's bar by bar style or Owl's bar by bar style, but the basic principle is the same. So why don't we just start with the last Friday of the price trading day? We can do a bar by bar analysis here. So try to be quick. Um, so any analysis starts with the higher time frame market region analysis. You probably heard at least thinking, we could come all the way up to test the high close on the monthly chart, which is here. It was never tested, so that's a straw man, and it looks like we're going to test it. Right. This is also somewhat confirmed by the weekly chart. It was a strong bull leg up and odds favor that at least we will get another attempt to go higher. On the daily chart, previously was at this point, or if you can see here, before this bar, it was a breakout mode. The gap we're holding, all the breakout gaps we're holding. So it is more likely that this breakout mode, it could be a final flag, but more likely we're going to have a bull breakout out of this. How do we know this is a breakout mode? Well, if you can see, we had 3 legs down, 3 bear legs, and also 2 to 3 bull legs up. So technically, this is a non-trading zone, but since the context is very bullish and we have a bull bar close on its high, then it is very likely we will have a bull breakout from here. So yesterday was quite a surprise. I don't know if you remember, I said that this bar, technically, it should be a bad buy signal, and there should be some selling pressure here. But it turns out to be an island reversal. And this reversal seems pretty strong, as confirmed by the intraday price action. So we had attempted a bear trend, but it really failed. Let me try to add on the higher time frame EMA here. Where is it? Should be okay. So 60-minute EMA, so hourly moving average. But the market response to this was a strong breakout. So this event has become major. And I also said that, especially after this bar, this whole thing has become a breakout, right? Especially I don't know if you remember the energy within this bar. It is less likely to become a vacuum test of the ET high, but really a new breakout at this point. So I said testing back to the open of that day is out of the question. It's less likely to happen. The market somewhat holds the breakout gap, and you can see the bears couldn't have anything down. Supposedly it was supposed to test somewhere in this range, and the bulls had front run that. So it's quite strong. And the market was clearly always in long. So the open of Friday, we had a medium gap range up, and the first bar was a bear bar. But you can also see that there are buyers within the range of this bar. Okay, especially the open is here, and then some traders bought and then start going down. You remember Ali once said 75 to 80% of the daily chart, if it's going to be a trend bar, it rarely just go directly in that direction. So it often goes into the opposite direction. And I thought this could be what was happening. We were going down to test for support. Consider that maybe we had a channel line overshoot. So usually the market will test down to the trend line. In this case, it aligns pretty well with the EMA. So I thought we could test all the way down to the EMA to probe for support. Okay. As the second bar is also confirming the price action, and the third bar, right? So as we going down, we of course tested the high of yesterday, but as we go down, you can see it's losing momentum. It's basically dying down. So what does that imply? That implies the bulls are buying. Okay. And then a bull bar, right? Is this a good reversal to buy? Well, it's got the minimal requirement, which is to test for a potential support. And you know, the bears are dying, the context is very bullish. Is this a reasonable buy? Yes, it is. But what's the problem with this bar? It has tails on top, right? And also we know that there are likely trapped bulls here within the upper tail. So if you're buying here, I usually, you know, when I see a bar that is presumably to have some trap traders, I simply do not think that the market will come here or go above it in a single run. It may be, but it might not be true. But I would just place a, you know, imagine there's a line at the 50% of this, you know, basically separating the sell zone. So if I had to take this trade, I most likely will only take profit here. Is that a good risk reward? I'm risking potentially here, going for this amount of profit. It needs higher probability than that. Well, it is a reasonable trade, like I said. So I need more information. Okay, so this bar is what I want to see. And if this is going to test to that area, I want to see at least a good entry bar, right? And the good thing about this good entry bar is it has a small bear pullback within this. So that could be all the bears could have from this. And if that's the case, then this bar should be by the close and we should immediately run a stop. But like I said, you're going into a trapped bull zone. You never know what's going to happen. But if this is going to be a strong bar, the next bar should be equally strong or even stronger. So that's my expectation for the bar. As you buy here, you're probably taking profit there. But this is, again, not, you don't know yet. There are trap traders here. All right, so this bar, what's the problem about this bar? This bar is not doing something like I said. If the bears are giving up entirely, we should just run a bear stop immediately. And this bar is slowing down, so that's quite suspicious. Okay. And we just need more confirmation at this point. So if I bought the close of this and seeing this bar, I think I would just take profit, right? Because it's not doing something that I want. Okay, so this bar, another bull breakout bar, it's very bullish. And clearly that there are trapped bulls getting out as well, so the lower tail. The upper tail is probably indicating that bears are fading the high of this. Okay, they're fading the high of the trading range. So now we have 4 consecutive bull bars just above a support. This is a very strong bull leg, and it will likely to have a some sort of a second leg. What do the bears have? Well, the bear have had like 3, you know, micro channel down, and the bears who sold the low close didn't really have a chance to get out. So this is some buying urgency or the bear urgency, right? The bears trying to break even and they couldn't really. So we know that if this one had a pullback, it is likely to pull back to the trapped bear case, which is the low of 6 to the low of 5. This entire bar or this gap, of course, is going to be support. So the first reasonable trade on the day, I think the limit order trade on the day is to place it here. You know, there should be a buy either below this to below here, all right? And of course, the gap itself, okay? So what is the reasonable place to drop your order? Is it below here? Probably not, all right? Although it's a bad bear short, but it's likely that the trapped bears needs to get out break even. So I would at least go down a bit lower. But the good thing about the trading alley system is that you don't actually care about, you know, how much more risk you're putting down. Your risk should be a range, not like a very specified value. It should be a range of risk I'm willing to take. What is the absolutely thing that this can go wrong? It needs to break out below here, had follow through, and had probably 2 bars of follow through to basically say that the trade has failed. Right, so you can see the next bar started to vacuum down, which was a surprise at the time. But again, it's not too surprising. And And this breakout, although it seems quite big and quick, but it couldn't break out below the low of 3, and it couldn't, of course, close below that. And we're above the moving average after a strong breakout. So odds are less likely that this is a higher high major trend reversal or a double top reversal. Okay, so bet that there are buyers below this bear bar, or simply buy the close, or they had already been in the trade. The bulls are already in the trade. Of course, the EMA is support. All right, an inside bar follow through. So this is bad for the bears and also bad for the bulls, right? Because the bulls want a strong rejection. They want this one to simply rockets up. Test it down to the support and immediately reverse. So make something like a pin bar or a 2-bar reversal that looks like a pin bar on the 10-minute chart. But this is not doing so. So there are some sellers or trapped bulls effect as well. But it's okay to hold your long, and I think it will at least try to test the high close, to this close or maybe this close. Okay, so this bar is doing that, and you can see some bulls are letting go of their trade. And the minimal requirement for the momentum energy bar is probably another pullback. Okay, so then we have it. And since this bar is pulling back, we could just rockets up. So I think that this bar could be by the close, right? Although if you don't want to buy the close, then wait for a bull bar to buy. Don't buy these bars. Okay, so bar 12 is quite interesting, all right? If this bar is by the close and all the bears should give up and we should run a stop, why does it create an inside bar? I don't know if you remember, Ali once said, when you clearly see that there are trapped traders on a certain side of the market, and then the market doesn't run the trap, right? But it creates an inside bar. So that's doing indecision. So had I planned to buy the close here and I was already, let's say that I am already in the trade and seeing this bar, that's a hesitant. I would, try to hold during this bar. It's not enough reason for me to go short or to let go of my long. But if I had not take any trades, I would not buy the close of this bar because this is suspicious. I would at least wait for the bull breakout to happen. And okay, so this bar is somewhat of a surprise. Okay, so it is showing a strong breakout mode characteristics. Again, similar to the day chart here, we had 3 legs down in the same direction. We had 2 legs up. So the market is in breakout mode. Technically, it's non-trade zone, but this bar is somewhat of a surprise to the bull, right? It shouldn't have happened. It should just rockets up. But it's testing a trapped bear region, so there are still bears trapped here. You can see that how this bar responded to the tick gap or the entry price of that. It failed, all right? So there should be buyers below this bar. Okay, so that's the minimal requirement for that trade. But again, this bar is a surprise, so probably we need to pull back first. Okay, a breakout. Now we're likely to break out higher, but again, this bar is a surprise. The minimal requirement for that is another pullback. So right now, I think there are buyers within the range of these 2 bars. They might buy below, they might just buy anywhere within the range of these 2 bull bars. Okay, a pullback, this bar could be by the close. It looks like a wedge, but this wedge was really, really bad. It's a breakout mode, and you shouldn't really fade the breakout mode in the strong trend. Okay. All right, so there are buyers here, buyers below the fading this bear entry bar. It should now break out higher. Okay, so what's the problem with this breakout? Well, it couldn't close above that, right? It closed above 1 bull bar, but there are some still sellers above this, okay? And some traders might think that this is a wedge. I don't really think so. I don't think that this is a wedge. I think it has to be some sort of a reset price action, and this is a market response to it. It is IVS 39, so technically it's bearish, but again, this is not enough reason to take the short, okay? And of course, buyers below here expecting a breakout. But the more we go like hesitation, the less likely that the breakout will be successful. So why aren't the markets just breaking out? It's doing hesitation. So there's something wrong with this trade, okay, with this bull trade. All right, finally breakout, a bar that closed above everything so far. And I think that this is somewhat of a bullish price action, but it's quite suspicious as well. We have tested to a point. I don't know if you can remember. Let's go to the weekly chart. Yeah, so this was really testing the April high of 2022. Okay. Sorry, it wasn't that. It wasn't that. Where was it? Should be somewhere in here. Testing the daily high. Yeah. So I remember it was testing this range, in the breakout mode of this range high, right? So this one was forming. Okay. Testing here. So expect some hesitation, but not too much, right? Because we think that it makes a breakout mode just a little bit below the high of this trading range. We should just break out, okay? And you notice that this bar has very small lower tail, okay? The lower tail, this is an indication of urgency, all right? So if this bar were to, let's say the IBS was a little more bullish, like 85% IBS, then that bar could be by the close bar. Okay, so it turned out that the market did bought the close. You can see that 21 was a shaved open. There was no lower tail. So every trader just bought, while this bar was forming, and some of them took profit. So the last two bar was really a strong breakout to me. Okay, at this point we have 1, 2, 3, 4, 5 bull bars. So it's a change of characteristic. We're finally breaking out. So I think that this bull leg will have a second leg. Okay. And then the interesting thing happens. We had a consecutive II. All of them are bullish, and adding 2 more bull bars to the micro channel, or whatever you like to call it. This is significant, but why couldn't it break out? Right? It's making volatility contraction after breaking out above a major swing point. So the market is likely, again, it's likely to probe down for support. And this could also be the final bull flag for this leg. So selling above it, I think it's outrageous. It's probably not a great idea. But when this triggers and it turns down, this could be a reasonable sell, right? Because we could, we just break out from this. We could have a pullback test of the breakout point, which is below this bar, or at least back to the moving average. This is also what Ali had called an attack formation. Right, we have a trading range, we had a creep up. We're going faster than the moving average, so the moving average is adding speed here. We could come down to test the moving average. So if you take this trade short, you have to take profit at least down to here. Otherwise, you're not offsetting the risks that you're taking. So I did short the close on that day, 24, taking a chance that we should test below this bull bar to the moving average. So, okay, a good entry bar, decent size, not strong, not very strong, but good entry. You can see that very minimal upper tail, very minimal lower tail. So very strong IBS, I tend to hold. Okay, another good entry bar, all right, shaved open. But now it's also creating like a layer of resistance right now. So these two bars are a surprise for the bulls who try to buy below, let's say this, or the buy the close price. There might be some bulls buying the low of 21. More likely the bulls are fading below this. And I decided to hold my position here, look to add. And here, this is another breakout, but you can see there are buyers below this bull bar, right? So I had to quickly take profit in this trade. So I just took profit below 27, taking the chance that, try to maximize my profit. So this is a somewhat of a strong bear leg, right? It is breaking out of this tight channel, whatever you like to call it. You can draw it. it is more likely to break out from this channel. But it is less likely that it's breaking out from this big thing, right? Maybe it is considered a breakout, but this is becoming an event at the point. So I thought that there could be a second leg for this. But testing the breakout mode, better look to buy. And it's less likely for this entire thing to turn into a reversal pattern. Even if it does, it still needs a higher high MTR or a lower high something. And then this bar happened. This bar had a very strong momentum while it's forming. Right? I said that, you know, the open of 26 and the close of that should be a layer of resistance, because this one was a seller close. Every trader sold the open of 26. So that is a layer of resistance. And what this bar does, you know, it busts through that. And it's not creating like enough second leg momentum for this resistance level. So basically this resistance has failed, right? But I thought that, hey, look, that this is a bad reversal swing point. The market should test all the way down to 24 low or even the close of that. So I was originally trying to short this, but as this was forming, I immediately pulled my limit order and dropped it here at the 24 close. So basically betting on that the market should give me some higher, so I should look for some higher price to enter. And I got filled here. And I had to be honest, I wasn't very happy about filling this trade because, again, this had a bear leg down. So that could be all that the bears could have, right? So two strong trend bars, right, with a bear leg that's coming for this bear leg, and it's closed on high. Technically, still always in long, reasonable to buy above it. But I was already short and I couldn't cancel the trade. It's probably a mistake. So I was prepared to either reverse my trade if the next bar show up a bull bar, or I'm looking to exit just a little bit below, somewhere within the range of these two bull bar, because there should be buyers within the range of these two bull bars. Okay, so the next bar is a hesitation bar. I was trying to say, let's just exit below this doji bar. So I thought I took the profit just below that. And I did take profit just probably on the close. I couldn't remember exactly. But then I quickly switched to buying mode, just buy below this bar. And this was the full reaction to it. It looks like a double bottom, bull flag. So immediately what you do is you do a measured move of this double bottom. Okay, it is very likely the market should reach here, right? But at the time I drop my, so when I see, let's say a 60% or even higher than that, 70% measure move, as a scalper, I often only put my first target at the 50% of that. So I bought here somewhere in this, and I dragged my target just at 48, 45. Okay, I wasn't paying attention to the big round number, which is 48.50, but I dropped my target here, and I look to add because this is too good. So we had a breakout. This bar, although it's quite small, but it has all the characteristics of a strong bull breakout. You know, like very little lower tail. The bears really had nothing. It's also second leg pullback, so very good stuff. So I look to buy below this bar. I remember I just simply dragged my limit order here. I didn't even wait for this bar to trigger, just put it somewhere within the tick gap and added the second part of my my contracts, and then look to take profit here. Okay, so is that a swing trade? Well, maybe, but I think it's a high probability even in this case. So this bar is probably buy the close. So we had buy the close reaction to it, still buy the close, breaking out of this, and boom, just took profit here at 50%. Why take profit at 50%? Well, if you go through Ali's course, he often mentioned that, when you see a very clear target, the market usually hesitates just before it reaches the target, right? And then a good location for that is about 50% of that. So I took profit here, exactly at 45. And then the market is showing a doji bar, but look, this is a new breakout. It's after the channel break, the market is responding to that as a new breakout. This reversal should fail. So look to buy below, either the breakout point or just buy anywhere in this micro gap makes sense. But there are two upper tails, so probably some trapped bulls within the range of this, but eventually the market should run their stop, okay? So this is a stop hunting strategy, whatever you'd like to call it, by within the range of that. So I remember I bought the breakout point of this, just fading this gap. And I got filled here on 39. I was expecting the next bar to just rockets up because this is likely a bear trap. But the market then make inside bar, indecision bar, okay? It's similar to this situation where you see one side clearly trapped, but the next bar is not like showing, oh, okay, we are trapped, we should let go. And it's showing indecision. That is a general case that there's some hidden information you haven't seen. So I just put my, originally I was targeting this, but now I just took profit at the high. So I simply took profit at the high, not even waiting for 42 to close. And since it's Friday, that's all the trades that I have took on Friday. All right, I usually just stop at bar 40. Ali suggested you stop at bar 60. I stop at bar 40 usually, unless it's really good. And of course, we all know what happened the next. The market was breaking out strongly. It was testing all the way up to, let's use weekly. It was testing all the way up to this high, April high. And there was an overshot within this trend leg. If you see that, if you draw the wedge, something like this. The final bull move can be seen as some kind of a overshoot, but not really. Maybe we are adjusting the speed of it. Even here, it's an overshoot. It's more likely the second one. Okay, so this is likely a new event. You have to reset to the leg counts. 3 pushes up first, or this is the breakout, 2 legs of pullback, 1, 2, 3. Okay, this is later on the final push overshoot, and the market response was a bear bar. So this is very strong parabolic bull wedge. So odds are only 50, probably less than 55% chance the market should go down here. It is, it's going with the higher time frame context, with the 5-minute frame context. This is probably only 50% will test to the last buy climax. And sellers will prefer to sell the high instead of sell low. So look what happened. They sold the high of it and simply just take a half bar range of a profit, and they should let go. And later on turns this into a continuation pattern. Also a breakout mode, 3 legs down, 1, 2, 3. We should continue higher up. Okay, so that takes to the end of the trade. There's nothing special about this day, but I think that when everyone knows that it is a buy the close market, you can actually see them. The bars have no lower tail. It has shaved open, or 1 tick in, against the open or something. That it is a clear trend, and you should just buy for any reason. Even that if this pulling back, it's better to wait for the pullback to happen and look to buy. It is, highly recommended doing that instead of trying to fade this. Okay, and that's all I have for this day's practice. Thank you.